cold emailing VCs has a 1 to 2% response rate. Now, if you send 100 emails, that means 98 of them get ignored. A lot of founders I've spoken to, literally over 100 in 2025 alone, have told me just the struggles of their process of building these connections and talking with investors. I've been able to build a massive network of investors and build a lot of great relationships. And today I want to break down exactly the process you can use as a founder so you can raise capital for your startup. What's up, founders? I'm Chris. Thank you for coming back to the Next Round Ready channel. If you're your first time here, make sure you subscribe to the channel, like the video, hit that hype button. It costs you nothing. Today, I want to really get into this warm intro process, and we got to start off with why cold outreach fails in the first place. The truth is, investors get too much of it. It's not even a personal thing to you, like, oh, if I change the script or if I write a better subject line, that doesn't matter. It won't work because I have so many investors I've spoken to who literally will tell me that my inbox is full from people I know. So the people I don't know can never break through. And you got to put yourself in the shoes of an investor. If they're an investor, that means they have 100+ people reaching out sometimes per day on LinkedIn, especially if they're active and they post content and stuff. It's ridiculous. And I can say this because they've literally shown me their inboxes. Like, we'll be on the call and they will screen share and I see their inbox and it blows me away because I don't know how you deal with that much inflow. Like, it's overwhelming to even look at, let alone have to sift through. And I think some founders think it's like an arrogance thing, or I'm an investor, I can't talk to you, I don't have time. So I'll show you one investor on my show literally talking about what it's like to receive those emails.
Well, I think I'll just say something obvious but important. If you want to get in touch with me, if you want to, in general, with pre-seed funds, we're institutional money at this point. Like, I run an institutional pre-seed fund. We we have like a full process in place and so on and so forth. So what I would recommend is always try to get a warm introduction. I have a lot of founders cold calling me, guys. It doesn't work. Find somebody that knows me and knows you and can vouch for you and have them ping me. And then I'll be able to give you my full bandwidth, figure out if this is a good fit, if I can be helpful to you, all that stuff. The cold calling doesn't work. Go build your network of advisors, angel investors, other VCs, folks that can help you on that journey. It takes time, but it's a good investment. And then reach out, get warm introductions. That's really the only effective and repeatable way to get funded.
Now, see, right from the horse's mouth, that's just one investor, but I could show you maybe 10 or 15 more who say the same thing. So cold outreach is not going to work. Now let's talk about what does work. Now, there's a difference between investor targeting and investor blasting. What most people do is investor blasting because it feels good. It feels great to say, oh, I found this spreadsheet of 500, 1,000 investors, and I'm going to email all of them. Somebody's going to respond and give me capital. No. That's not going to work because out of that 1,000 people you email, most of them are already receiving those emails, all the pitch decks, the same subject lines. Nothing about you is going to stand out at that point. And when you blast the investors, this is another part that goes very bad. You're not talking to investors that fit your specific sector. So if you have an AI startup and you're emailing a health sector investor, those don't really align. It has to be a same like breakdown, right? And I also think, honestly, blasting doesn't work simply because it's lazy. It's the lazy approach. Going to get a list of 1,000 people and just emailing all 1,000 people and expecting to get $100,000, $500,000, $1 million plus for funding for your business is insane. The logic behind that doesn't make sense. Now, targeting is different because in targeting, you're a little more methodical. You take your time. If I'm going to target an investor I want to connect with, I want to know details about that investor, their thesis. What the hell do they care about? What are they investing in now? I even look at their past deals, right? If you haven't written a check in the past 6 months or a year, are you still an active investor? That's like my first question when I reach out to you. Are you still doing this? Are you in the game at all? Like, it's so much that goes into the research part that if you're just blasting people, you can't execute that well. And targeting also helps because, again, those sectors. So if I have an AI startup, I can find an AI investor, especially when you're looking at like angel investors. Oh my goodness, you got to be specific with them because they're really excited and ready and willing to work with founders. Whether you have a ton of experience, some big exits or not, they love to work with founders who have everything together, who are on the right track. So you have to take this approach more methodically. That's why targeting is such a big deal. And this is how I try to compare it, just to break it down for you. Investor blasting when you're trying to raise capital is like using a machine gun. You just shooting everything. Now, investor targeting is like being a sniper, taking your time, you setting up the shot, checking the wind and all that. That's what you want to do. So how you really execute this is to build your investor list the right way. Number one is the sector, making sure you find investors that only fit your sector. Now, there are some that are in multiple sectors or that would kind of make an exception. It is possible, but you want to start off with only investors that fit your sector. Meaning, if you are a healthcare startup, if you do hard tech, only look for investors who invest in healthcare or hard tech. Do not go to the AI investor because you got an AI feature on your hard tech No, 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 no. Again, that's a possibility. I'm not saying it's not, but the investor that is invested in hard tech is going to have more connections for you. They're going to have more direct insight. They'll have better marketing strategies that fit you specifically because you're in hard tech. So when you kind of put those and you tie it together, that's going to get you to the capital raise a lot faster. Now, the second one is the sector fit, right? Have they invested in a company like yours? What does their portfolio look like? I love to go to the investor website and see what they've invested in, see what they work with. I'm Googling you to see what the exit was and, when it happened, what the process was. I want to see all the details of that stuff. That tells you a lot about an investor. Sometimes it'll tell you the negative stuff that the investor won't say out of their own mouth, but you learn it because you did your research. Like, that's why blasting is so stupid to me, because you might run into some investors that had you done a little bit of due diligence, you wouldn't even want to work with. You wouldn't be interested in. But it feels better to put a lot of names out there. I get it. But when you go this more methodical route and you check things like that, you can get a lot of information a lot faster. Check size is number 3 on the list. Because if this investor only writes checks like a lot of angels do between like 50K, maybe $250,000, you're going to miss out if you go there asking for $1 million. And like, too many founders do this. I hate this. Not doing the research on that part is so detrimental, because let's say you're raising $1 million, you already have 500 committed. Now you need 500 to continue on what you're doing, right? If you go to this angel, they might have a syndicate, a group of people they work with that also invest with them. They could get you to 500. But if you go in there asking them for 500 because you didn't do your research, you could miss out. And some founders demand that from the investor they're talking to, and this is how much we're raising. They put that in the outreach email. That, oh God, I hate that one so much, because you're cutting your foot off, because they could possibly want to work with you, but you've already ruined it before you started the race. Now, step 2 of this process is where you have to really be methodical. And I talked about this at 10 West a few weeks ago. Once you have that list of investors you want to talk to, I like to cross-reference that to my connections that are existing already on LinkedIn. LinkedIn is home base for you as a startup founder. You got to start there, create content, all of that stuff. If you're on LinkedIn and you're active, you are going to be making connections nonstop. Now, when you go and search up that investor, right under their name, it'll tell you if you have any introductions. Sometimes you can click a button and say, hey, you're connected to so-and-so. Could you possibly connect me? Sometimes I'll take it a step further and see if they actually have any interactions, any engagements, because then I know, okay, this person is actually connected. They actually have this relationship, because sometimes you connect with people on LinkedIn, you never talk to them. But there are some people who have really close relationships, or they'll be more willing to talk to somebody that came from a contact within their network existing already. I'd also suggest looking at some of these events, the local meetups, the bigger events, the conferences. Look at all of them, because you'll run into a lot of investors there that you can't get access to online, that they have a LinkedIn and they have the email, obviously, but they're so busy, have so much going on, you can't talk to them. Now, events are a little harder. This is why the warm introductions matter. At the event, you don't want to run to the investor or try to talk to them. No. You talk to the connection. That person you're connected to that can connect you to the investor, that's who you go after. Because all the other founders are going to chase the investor around an event, be waiting on them in the bathroom. What you want to do is talk to the person that knows that investor already, because you're getting that warm introduction now. So your intro to the investor might not come at the event. It might not happen right there, but later on, within a week or two, you follow up with the contact from the event who's connected to the investor, and now it takes off. So I like to kind of go through that process of Because that's what some of these people at the top do. Let's be real. They filter people out. And so it makes sense. I don't want everybody with a startup idea running up to me every time I'm out in public. So they have barriers to entry. It makes sense. That's how you get around it though. Now I'll share with you a little bit about myself and what's been working for me. That has been these partnerships. Oh my goodness. I'm connected to a lot of universities and accelerators because I built these connections with investors. Okay, now share a little more about my process and how I've been able to go from no investor connections, not knowing anybody, to building my reputation a bit, building more connections. It has been through events. I'm telling founders all the time, get outside, go to these events, go to the workshops, the meetups, all of that. It seems underrated and unnecessary, but it is so helpful. Now, I will say when you go to events, you have to stop going there just to talk to investors. You got to engage with other people in the event. You need to be active in the event and talking to other people, building relationships and connections because some of the people you meet, they have other connections to other investors that you aren't even aware of, that you don't even know about. But it's something that doesn't cross your mind because you're so focused on getting what you can get from the investor. No, 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 no. Go talk to all the 5 people that know that investor that are there in the event. Then when you leave, you'll have 3, 4, 5 people talking about you. I think going to workshops, demo days is huge, even the local meetups. A lot of that stuff is where those relationships kind of start. That's where it begins. And then the back end, this is probably the biggest for me. Matter of fact, I know it's the biggest. It's the podcast. By the way, if you're not subscribed to Next Round Ready, what are you doing? You're going to learn from investors all the time. Make sure you go and sign up. Go listen to all episodes from season 3 before we did the rebrand. Amazing content. This show has absolutely, honestly changed my life because now having a podcast allows me to build a lot of relationships very easily. Because most people just use the podcast regularly, like, oh, I'm just going to start a show. I take it serious. I treat it like it's HBO and I build great relationships. I get referrals from the podcast. Whether it's a speaking event, if it's another guest, if it's a client, a lot of it comes from the podcast. It's not me telling you to start a podcast for your startup and all. I'm not saying that. But first of all, apply to be on Next Round Ready, obviously. But outside of that, get serious about your content. Show up on LinkedIn. And if you can build some kind of platform with your team you have now, listen, you eliminate a lot of competition you might have, or you might even think you have, because most people are lazy. They don't want to do that part. But that's the work that pays off. Now I have so many investors that know who I am, or they even reach out to me to be on my show, which is, it's still mind blowing. Like to know that these people actually go and listen to my show because they reach out to me on LinkedIn. It's insane. And that's what could happen to you as a founder if you're posting good content, you're showing up consistently for your startup. So those are just the process and some of the unique stuff that I do that really makes it all easier for me. So if you want to raise capital for your startup, stop the marketing blast. These are not random people you're trying to sell a $5 product to. You got to make sure these are investors that are in your sector, that in your geography, that want to work with your company, have the right check size, all of that. Be patient and methodical about targeting investors and building those relationships. Make sure you subscribe to the channel, hit the like, go and follow the podcast. I'm Chris. Thank you so much for tuning in. I will see you next time.